Hello, I'm Cristina Marujos, and you're watching the Daily Market Comment at xm.com by Rafi Boyechian. The British pound is on the slide following reports that UK Prime Minister Boris Johnson will use his huge parliamentary majority to make an amendment to the withdrawal agreement to make it illegal for the transition period to be extended beyond December 2020. The government has confirmed that it will bring back the legislation on the Brexit deal to Parliament on Friday, which would pave the way for the United Kingdom to exit the European Union on January 31st. If it goes ahead with ruling out an extension to the transition period, it would keep alive the threat of a no-deal Brexit until at least the end of 2020. Sterling slumped on this prospect and is now trading almost 2% below last week's post-election peak. The British economy is already at risk of a recession, with yesterday's flash PMI showing that overall activity contracted again in December. The Bank of England will meet on Thursday, and any dovish shift in its statement is likely to further weigh on sterling. Equity markets remained in a buoyant mood on Tuesday, with Asian stocks getting a lift from another record close on Wall Street overnight, as well as strong gains in Europe on Monday. However, there was caution elsewhere amid a risk that the US-China Phase 1 trade deal could still hit a stumbling block. According to Reuters, Chinese negotiators are worried about the wording of the final draft of the agreement, and while all the indications are that a deal will be signed in early January, the threat of the talks falling apart has not been completely eliminated. The market caution kept most major pairs within tight ranges, except for the Australian dollar, which, along with the pound, was one of the worst performers on Tuesday. The Aussie fell after the minutes of the Reserve Bank of Australia's December meeting hinted at a possible rate cut in February. The US dollar, meanwhile, was broadly firmer and edged up versus the yen after being bolstered by better-than-expected housing and PMI data on Monday. This was today's Daily Market Comment. Thank you for watching us at xm.com.